Every day you tap your phone without thinking. Groceries, gas, a coffee on the way to work. The world feels smoother, faster, cleaner. But behind every tap is a trace. Every purchase silently builds a map of your life, who you are, where you've been, what you value, and what you fear. They told us a cashless world would bring convenience. They didn't mention the control that comes with it. Digital currency and control. What a cashless world really means. Cash doesn't have a memory. Cash doesn't ask your name. Cash doesn't check your location. It's quiet, simple, final. But digital money is alive. It talks, it records, it builds a profile. And in a fully cashless society, there is no offline, there is no anonymous, there is no just between us. Every dollar becomes a data point. Every transaction becomes behavior. The moment money becomes code, it stops being yours alone and becomes part of a system you can't see. Most people think digital money is one thing, but it's actually built on 3 layers, each one more powerful than the last. Layer 1, payment apps and cards: Visa, Apple Pay, PayPal, Cash App. These are middlemen, the visible face of digital spending. Convenient, fast, and built around gathering data. They know your favorite stores, what nights you eat out, whether you're stressed. Yes, your spending reveals this. How often you travel, how much you save. This layer is already here. You use it daily. Layer 2, bank and fintech rails. Behind the apps, banks and payment processors run the infrastructure. They log the time, place, amount, category, merchant ID, device ID, and connect it all to you. This layer decides, account freezes spending limits, chargebacks suspicious activity flags. It's the silent rules engine. Layer 3, central bank digital currency, CBDC. This is the layer most people never think about. Money issued as software, not paper. No banks in the middle. No cash alternative. Just digital units controlled at the monetary source. And with software money comes something cash could never do: programmable rules. This is where convenience ends and control begins. Programmable money means transactions that obey rules. Rules written by politicians. Rules written by bureaucrats. Rules written by algorithms you'll never meet. Here's what that could look like. Hypothetical example number 1, the expiring stimulus. The government issues $1,000 in relief payments, but the money expires in 30 days to boost the economy. You can't save it. You can't invest it. You're forced to spend it, whether you need it or not. Hypothetical example number 2, location-locked money. A public health emergency is declared. Your digital wallet won't work more than 10 miles from home. Not because you broke a law, not because a judge ruled against you, just because the software says so. Hypothetical example number 3, category bans. Your CBDC wallet denies alcohol purchases after 9 p.m., fast food if you exceeded your health quota this week, travel during CO2 restriction periods, political donations above a certain threshold. You try to buy something. The system says no. Hypothetical example number 4, social behavior scoring. Your financial privileges adjust automatically based on who you associate with, what groups you donate to, what media you consume, where you travel, what you post online. Sound far-fetched? Some countries already do this. This is how every system of control begins, with a promise of safety. You'll hear, no more fraud, instant payments, better tax fairness, easier emergency relief, more financial inclusivity. All true, all desirable, all beneficial. But here's the catch: power is never added without being used. And once a tool exists, even a harmless one, someone someday will use it to do more. Convenience is the bait. Control is the hook. Money used to be numbers. Now it's identity. What you spend money on reveals your political leanings, your health problems, your addictions, your relationship status, your religious habits, your late-night impulses, your financial stress, your social circle, your weaknesses. AI doesn't guess. It detects. Your transactions become a psychological fingerprint more accurate than your social media posts. And in a cashless world, there is no opting out. Analogy. Your money becomes a behavior report card, graded automatically. Most people think control requires laws, but with digital money, it doesn't. Control becomes automated. Imagine, you criticize a political figure. Your trust score drops. You attend a protest, your spending radius tightens. You buy too much alcohol, your insurance rate spikes. You donate to a disfavored group, your wallet is flagged for review. You travel frequently, your carbon allocation restricts fuel purchases. No police, no courtroom, just sliders behind the scenes, adjusting your digital leash. This is how control works in the 21st century, soft, silent, frictionless. You don't even know what rule you broke. The system just nudges you until you fall in line. Crypto was born as a rebellion, an escape from central control. But the reality is more complicated. Most people buy crypto on apps that require ID. Most people store crypto on platforms, not hardware wallets. Most people never use it privately. Crypto can be freedom, but only if you understand keys, nodes, custodian, off-ramps, transaction traces, exchange regulation for the average person. Crypto often becomes just another digital bank account. But here's the important part. Crypto is still a parallel rail. A different road. Not perfect, not guaranteed, but alternative. When all money becomes programmable, a parallel rail is a lifeline, even for people who never use it. When everything is digital, everything requires permission. You don't own software. You rent it. You don't own movies. You rent access. Your car features unlock with subscriptions. Your apps are leased monthly. Your devices operate on someone else's terms. When your money becomes digital too, permission becomes the price of living. Imagine your digital wallet won't let you buy meat this week because you exceeded your environmental score. Your travel is declined due to a temporary safety policy. Your account is frozen because an algorithm misinterpreted your behavior. You lose access to your own funds during an automated investigation. These aren't punishments. They're settings. Programmable money opens the door to controls no one will advertise. 1. Time-controlled money. Universal basic income that expires monthly. Company bonuses that must be spent, not saved. Stimulus checks that force economic participation. Geo-locked money. Your digital wallet stops working outside a zone. Vacations require travel authorization. Protests become financially impossible. 3. Purchase category blocks. A switch that can instantly stop donations, reduce unhealthy purchases, block certain goods during emergencies, limit small business competition. Algorithmic allowances. Your weekly freedom changes based on medical compliance, political statements, social media posts, travel history, credit profile, not through laws, through code. This is the quiet danger, control that doesn't feel like control. Digital money isn't going away, so freedom has to evolve with it. Here's what actually works. Privacy by default. Digital cash that works offline for small transactions. Legal guardrails. Government must be legally blocked from monitoring or restricting personal spending without due process. Multiple rails, bank accounts, fintech apps, crypto, and cash, all coexisting. Transparency. Public auditing of all programmable rules. Civic awareness. Understand the system before it understands you. You don't need to be a tech expert. You just need to know where freedom hides. You can't control the whole system, but you can control your patterns. Use cash where possible, especially local. Spread your financial activity across more than one platform. Avoid unnecessary subscriptions. They normalize digital dependency. Hold small amounts of crypto in self-custody as a parallel rail. Pay attention to digital policy while you still have a voice. Freedom isn't a speech, it's a spending pattern. A cashless world will be faster, cleaner, more convenient, but convenience always has a price. And in the digital age, that price is control. The question isn't whether money will go digital, it's who will write the rules when it does. Because in the future, money won't be printed, it'll be programmed. And the code that controls your money will quietly shape the life you're allowed to live.